stream. Let's talk investments. Let's talk stocks. Let's talk the Fed, crypto, whatever you guys want to talk about. We'll talk about it. And let's just go ahead and hop right in. Taking a look at AMC here real quick. AMC is in the green this morning, up just 1.5-ish%. GameStop up 3%. Nothing too crazy exciting. Of course, we've seen some spikes up and down all morning, but, you know, kind of boring. On the volume side, volume is still super low on GameStop. Look at this, 21,000, 27,000, 39,000. That is tiny numbers, especially compared to what we were seeing last week. With AMC, fairly low as well. You can see 100,000, 76,000. Like, I mean, we've seen these in the multiple millions. But at least we're positive, so we can't complain too much. Palantir, on the other hand, down 3.5% so far today. I mean, how many days do we have to see a swing into the negative? This is becoming like the thing. Palantir just being down about 3%, you know, an hour or two into market opening and then crawling its way back up by the end of the day. Not sure why that's been happening, but it's been happening. I'll talk about Palantir a little bit more later, but for those of you who have been waiting for a potential in on Palantir, now here's your time. Here is exactly your time. You're in the 24s. I don't think that's a bad price. You know, if you could get it in the 22s or 23s, that'd be better. But I mean, 24, perfectly fine buy-in. That's when I started buying in, and I just personally got lucky because there was that big dip last, or I guess that was 2 weeks ago now. There was a big dip 2 weeks ago. But $24, that's totally fine as far as a buy-in price, in my opinion. We'll talk about that more later. Tyson Foods still just eking up those green numbers every single day. Bitcoin down 0.5% so far today. Oh, look at they actually just had a bunch of buying going on about 10 minutes ago. Jumped up in price. So I might be broke even on my my big Bitcoin buy the other day. Good morning, everyone. Good morning. Trey's Trades. I'm live right now, but I just wanted to say hi to my favorite stonk Jesus. Well, hello, Trey's Trades. Yeah, we are getting close to 200,000 subscribers. We should be able to hit that today. Oh, Trey's Trades raid. Maybe this is the bump I need to get out of streamer jail here. Drop them likes and money. Welcome, everyone. Welcome all the gorillas. Welcome, Gorilla Gang. What's up? What's up? What's going on? Cowabunga. Trey, we'll have to stream together later on today if you're still on this stream. All right, let's take a look here. Let's really dive into what's happened so far with Palantir yet today. Let's see here. Welcome, everyone coming over from Trey's page. You're the man, Trey. All right, let's see here. So it looks like we just started down low in the pre-market. Actually, there really hasn't been much sway in price the whole day. It just started low. So there wasn't like a big sell-off or anything. It actually makes me feel a little bit better about it. Yeah, Kathy Wood did buy more, but I think that was about 2 weeks ago. I think that was right in line when I first bought in. Let me just double check. See if she bought any more. So it looks like on March 1st, I don't know if this is going to let me see the article. Probably not. Yeah, on March 1st, she added 3.4 million Palantir shares. So she's about broke even then as well. So it's about the same time that I popped in. Welcome, welcome, everyone. Kathy Woods adds to Palantir. Yeah, that was March 1st. But AMC, let's see here, up 1%, not too shabby. Bitcoin, let's just see. Good morning, Daniel Weber. What do I think about the interest rate today? Welcome everyone here from Trey's channel. Let's see what's the 10-year at right now. So the 10-year bond rate. Wow, it's up to 1.67% today. This has got to be a peak as of recent times. Yeah, we're peaking. So my thoughts with the 10-year is it's not a huge concern of mine until it gets around like 2.2%. That's when you're really going to start seeing that compete with stocks. The bonds competing with stocks. And then when that happens, there's going to be less buying pressure on stocks, and I think stocks will start to roll down because of it. Now, will it hit 2.2%? That I'm not sure of. I mean, we don't know for sure. I know Jerome Powell was at least scheduled to talk today. I'm not sure if he still is going to, about just the market in general and inflation and the 10-year Treasury note rate. I have an article here that we could all take a look at here real quick. Let's see. The Fed must walk a fine line on Wednesday as financial markets hang in the balance. Now, I know this stuff might be boring, but it's actually important if you have any kind of investments. Welcome, Gorilla Gang. Let's see those money trucks in the chat as well. Let's see here. Federal Reserve concludes its two-day policy meeting today, Wednesday, with expectations for no change in interest rates. However, Bank of America said the meeting will be one of the most critical events for the Fed in some time. Chairman Jerome Powell and his fellow policymakers will have to convince investors that their current policy is correct and won't change in response to a brighter economic outlook and major progress in the COVID-19 fight. So a resurgent economy, percolating inflation, and a stock market ripping higher don't seem to make much of a recipe for easy monetary policy. But that's the position in which the Federal Reserve finds itself. The challenge for the central bank this week will be to explain that position to investors and assure that even if the status quo remains, that won't provoke policymakers to change course. Okay, I'm not sure if anyone knows what time Jerome is actually supposed to speak. I was looking earlier and I couldn't find it. The basic line is everything looks a little bit better, but there's still a lot of uncertainty when we're not going to do anything soon. So we're going to see some economic projections. Basically what we're worried about is, will the Fed increase interest rates sooner than what they were saying before? If they increase the interest rates sooner than what they were saying, because originally we were hearing about until like 2024, we're basically going to keep these rates at near zero. If they bump up that timeline, that could affect markets because as interest rates increase, this purposefully slows down the economy to help combat inflation. Now, I suspect that they're going to just keep on their current trajectory, because whenever we hear anything from Jerome Powell, from the Treasury, they just say, not worried about inflation. So I assume if they're all publicly saying, I'm not worried about inflation, they're going to just continue with that sentiment unless there's something else that has changed that might sway their opinion. But I haven't found anything that might sway their opinion. So, 2 p.m. Eastern time. Okay. Or 1:30. Okay, we got times all over the map here. Someone send me a link as to when he's going to go live so I can verify it here. Because we have 3 different times so far. I keep suspecting. Money trucks, yes. Why do I think the volume is so low on AMC and GME today? They've been low most days intraday, and then they'll see some spikes of volume, a few points in the day. I think it's because there's just a lot of buying, and a lot of people have bought and just simply held. Like, People who are interested in these stocks bought into these stocks on the dips. Now we're at higher prices. You know, maybe you bought into AMC at $9. You rode that thing down to $4. Now you're back up to $13. And you're just kind of sitting there like, I don't want to add to my position. I just want to wait and see what happens. And if we're just waiting and seeing, of course, there's no volume. There's no trade volume. So I think there's probably a lot of that. There's probably just a lot of like, let's see what happens. So that's my suspicion. People who want to be in these stocks are kind of already in there. You might have already allocated the amount of money that you're going to allocate into AMC, GameStop, any other meme stock, and you're just waiting. Will this thing pop off or not? Unless you're that God pill guy and you're dropping options contracts like you're a billionaire. Any thoughts on the unfolding Financial Services Committee discussion? I actually haven't seen anything on that right now. Is that going on right now? C-SPAN. Let me just check into C-SPAN here real quick. Why is my C-SPAN not running? C-SPAN. Come on. Give me that C-SPAN. There we go. Is there... The testimony's not going on right now, is it? Dun, dun, dun. Let's see here. Congress hears testimony again on GameStop, focusing on the financial plumbing behind the frenzy. No, that's not what we want to see. All right, let me see if I can find... see if I can find this testimony. Just bear with me for 1 second here. I'm not seeing this live anywhere. I'm not seeing this live. Someone saying Andrew's commenting live. Oh, so the Fed speech and Jerome Powell's speech is at 10:55 or 11 a.m. Pacific. Okay, so yeah, 1 p.m. Eastern. No. 2 p.m. Eastern. That's why we had varying times. Those darn time zones. All right, well, thank you, CNBC. Oh, welcome. We changed the membership names. Welcome, H. Brown. Thanks for becoming a member. All right, let me log into CNBC so we can play this live. Bear with me for 1 second. This is always a bit of a process. I'm logging in right now. Okay. So regarding the PPP for self-employed, you don't need the payroll proof as you are not an employee and self-employed do not have payroll. So it's just not possible to have proof of payroll for the bank. Your proof of payroll, if you're self-employed, is your gross income. So you just need to have a tax return that shows what your gross income is. And then if you're filing for forgiveness, you just have to pay yourself. It's weird how that works. Okay, so I got CNBC here. There's nothing on the testimony right now, but I'll keep an eye on it. For the PPP, it's weird with forgiveness because you're technically supposed to pay it to payroll, but that's just paying yourself if it's just you and your business. So there's really no way to like, I know this is a concern for people, but you just have to pay yourself. Like forgiveness will be easier than it seems. What do you think is a good buy-in price to buy more Bitcoin? I mean, right now probably is a good price. I bought, I just posted a video on this yesterday, but I bought $25,000 worth of Bitcoin yesterday. I suppose I can pull up my account. See what it's at. I think it's pretty flat since I bought it because the price hasn't swayed. If anything, it's gone down just a tad. Maybe it's recovered a little bit from this. Let's see. Portfolios. Yeah, so here's my, let me just make sure there's nothing. Okay, we're good. So here's my Bitcoin portfolio, at least what I purchased yesterday. It's pretty flat so far. You know, I'm down, well, after transaction fees, I'm down like $200 or something like that from what I bought yesterday. So, I mean, I'm not too worried about it. I think it's a good buy-in price still. Especially if you're going long term. Like my thoughts with this, short term, we might have a swing to, you know, maybe you can do a swing trade or something like that. Even that's kind of like, I don't even know if you want to do that because long term, it's still going to go up in value. You're probably better off just buying and holding. But the way I look at it is, you know, you might have the possibility to do a short term swing trade, or worst case scenario, if it goes down 30%, you just wait a few years and you're going to be way better off anyways. Okay, so someone says watching the Bullish Barbarians was just watching the Congressional hearing. It's sad. So many of these archaic representatives just don't understand the tech. Yeah, that's a problem that I have had with the last testimony is you can tell, you know, of the, I don't even know how many representatives had questions, but let's say there was 100 that had questions, like 6 of them seemed to be well-versed in just markets and in the understanding of what was going on. And it's like it would have been way better off if those 6 people just got to talk for an hour each and ask questions. Then I don't know why it's this thing where it's like, I feel like they need to feel like they're doing their job by asking questions, but then they ask questions that are like this. A lot of the questions are like, this doesn't matter, this doesn't pertain, and then you let the people off easy. There's that 5-minute timer, and if the person who's testifying just lets that timer runs out and does that's a wonderful question. Let me rephrase that question to you just to make sure that I have it accurate. And you know, then you waste 3 minutes of the 5 minutes. The time runs up. Oh, I guess I don't have to answer that question anymore. And chances are the next person's not gonna, you know, make you answer it either. It's ridiculous. Okay, here's the hearing, I think. No, this is the old one. That's the old hearing. Financial services. I mean, I don't even know if we really want to watch this because it's better to just have highlights of it, to be honest, I think. I wouldn't mind tuning in every once in a while, but I don't want to bore everyone by going through this whole thing, which probably will take 8 hours or something like that. Thoughts on CTRM? Let's take a look at their price. Castor Maritime. Where'd you go? CTRM, there we are. Let me just bring this to the top of the list. Okay, so we're down 2% today. I don't even know what their price swings have been. Okay, so they're down about 50% from their peaks just over a month ago. And I mean, that seems in line. But now let's see if that price is actually justified still. So CTRM. Also, is there any news? Have they purchased any additional vessels since then? By Castor Maritime stock just popped. Did they buy another vessel? Continue to surge higher. That's a gain of 39% in less than 30 days. Okay, so just higher rate for dry bulk shippers in general. It's such a strange thing to me that just dry bulk shippers. Have you guys been watching 000? Is that why there's all this hype around this? All right, let's check out. So they have a market cap of 582 million. Did we have their last quarter financials? No, it looks like we probably don't. Okay, so we don't have much to base this off of. Because, I mean, their sales have definitely increased and will increase. You know, they've increased their number of vessels by, I believe, 50% since the third quarter. So let's just say their revenue scales up by 50%. So let's do a little projection here. Of course, this isn't exact science. We're just doing a real quick projection. So let's say in 2020, they got 2.7 million plus 2.6 is market cap 582 million. 582 divided by, we'll do 17. 582 divided by 17 million. Price to sales of 34. Now, that's a very high price to sales. I mean, this is practically Palantir levels, but it's not like a tech company. It's not like a ultra high growth, ultra high margin industry. It's dry bulk carriers. Like, you can only charge so much because your competitors are doing the exact same thing. It's kind of like a service commodity or something like that. You're doing basically the same thing. If your customer service is a little better, maybe you can charge a little bit more. If your speeds are a little better, maybe you can charge a little bit more. But ultimately, you're not getting a huge price difference over the next guy. So I think this is an odd situation where this industry is very, very hyped, but it's not necessarily like, can they sustain 50% growth every single year? I mean, they probably could do it for 5 years, especially if they have a real high stock price. They can issue more capital to buy more vessels. They probably can do it for a short period of time. But even 5 years of that growth, I'm not sure if that justifies. And I mean, I know a lot of people don't like when I say a price is too high, but I mean, I've been saying this since before it dropped from this price to this price. So, I mean, this is one of those classic situations where I think it's a good company. I think they have good prospects. I'm just not sure the price is justified right now. All right, let's see here. Let's see. Palantir still negative 3.5%. Is BlockFi better than Coinbase? So here's how it works. Like, Coinbase is an exchange. BlockFi is where you can keep that money to earn interest on it. So you kind of need both. You need an exchange and somewhere where you can earn interest. So I buy my Bitcoin on Coinbase, and then I'll store it on BlockFi and earn interest on it. But I mean, there's other options as well. Some people like Gemini. Some people, I mean, there's a bunch of different exchanges. That's just the one that I use. Coinbase Pro. So if you make a Coinbase account, you can also have a Coinbase Pro account, and the trading fees are lower. They're like half. So that's kind of cool. It's like 0.5% or something trading fees. But yeah, I mean, there's different options. If you want to make a Coinbase account, there's a link in the description. if you want to do that, and you'll get $10 in free crypto. Okay, so someone is saying I can go to YouTube. YouTube event. All right, here is, we'll listen to this for a brief period of time. Thank you for sending this to me, Kes and I appreciate that a lot.
So, Mr. Pivovor, would you agree with that statement that the market infrastructure remains resilient?
I would, but I definitely have not seen any problems with the market infrastructure. But is this
let me know if that volume is okay.
That doesn't mean we can rest and assume that it's going to continue to work in the future. And so one of the things I put forward is that we should look at whether we want to think about shortening the trade settlement cycle.
Well, I think, I've got some questions on that, but I also have, to me, as an outsider looking in, when you have a stock shorted 140%, to me, that's a problem. You have more stock shorted than there is stock available. Do you think we need to limit the amount of number of shares that can be shorted, or do we limit the number of times a share can be lent to allow this rollover and to be able to get to 140% to stop this? So that, to me, this will be a way to fix the problem versus other extraneous things to me, the market actually worked here. People saw an advantage that somebody was doing something wrong and jumped in, took advantage of it. And we got some guys that got literally taken to the market on it. So would you like to respond to that?
Sure, thank you. I think before the SEC looks at either limiting short selling or looking at potential limitations there, I agree with Mr. Blomgren, and we need to start upstream, right? The short selling market relies on securities lending, and to your point, same shares can be lent out multiple times, and you can end up with the odd situation where you end up with a short interest exceeds the number of shares that's outstanding. Right now, that securities lending market, the SEC could go in and gather up information on an ad hoc basis and try to piece together what it looked like in the past, but it doesn't have real-time information. It doesn't have consolidated information. And so before we start directly looking at limitations on short selling, I think we need to address the opacity issues in the securities lending market. And the SEC does have authority there to do that. And so my suggestion would be, first, let's gather the data, and then based upon that data, we can make additional policy decisions going forward.
Well, to me, the number of times that you can lend a share, to me, like you've got a situation that's ripe for musical chairs with your money there. So my time is up. I yield back, Madam Chair.
Thank you. The gentleman from Missouri, Mr. Cleaver.
So I think that it's definitely important that they just make it less opaque as far as who's shorting shares. I mean, it should be obvious. You should have to say which shares you're shorting, which company you're shorting. I'm not sure if it's possible to actually limit shorting more than 100% of a stock, because there's so many different ways that they can kind of sneak in and short. I mean, we've seen this by companies shorting ETFs in order to short a company within the ETF. I mean, there's just so many ways around this. I'm not sure if that's even really possible, but I would love to see it be more visible who's actually shorting a stock.
Ms. Goldstein, in that whole scenario of short sellers, retail investors, and social media, when there is a collision, when there is some congestion, who wins and who loses, and is that predetermined?
Congressman Cleaver, thank you for the question. I'm also sorry to hear you're indisposed. I hope you feel better soon. I think when all of these forces clash, generally the largest Wall Street players are typically the ones who come out on top. I used to work at Morgan Stanley. They had incredibly profitable days when there was volatility. The same was true at Merrill Lynch. They just have these certain inherent structural advantages, not even over retail traders, but even over smaller Wall Street players. And I think Citadel Securities in particular is becoming a larger and larger force in the marketplace. So it's not just the large banks, but I think Citadel Securities in particular, in this particular situation, has profited quite well because they take up such a large portion of the retail order flow. And I think one of the things that the CEO of Citadel, Ken Griffin, said the last time he came before this committee was when no one else could provide liquidity, Citadel was there. And I think he was very proud of that. But I think that actually raises questions about Citadel's systemic significance to the financial system.
All right. Thank you for your response. This is for any of our panelists. Should not Congress be irreversibly committed to ensuring strong investor protections and making sure that we maintain a fair financial system?
We'll wait for the next speaker. I'll keep an eye on it. If there's anything interesting, we'll pop back over. My mic. Yeah, okay. So, Palantir just dipped down a little bit lower yet. What was its low today? So it hit hit a low of 24.30 today. Kind of just going flat from there. I guess what's the level of resistance we have here? So for a level of resistance, looks like our next one is likely around 23.45, but I don't think it's going to actually hit that. I think we're still going to trend upwards. Okay, thoughts on OCGN. Often seems like it could be moving up and then it just goes sideways or down. Let's check it out. Okay, so yeah, I mean, it's been relatively flat, down about 50% from its peak. Now, I'm not familiar with this company, healthcare, pharmaceuticals, medical research. So let's take a look at my guess is this company was hyped up based on some kind of news of potential FDA approval. That seems to be the case for most of these companies. Let's see. They still have a market cap of 1.72 billion, so they must have sales already. No? Wait, really? Let's see here. Yeah, no sales. I mean, so you said it's trading flat or sideways when it seems like it could go up. I mean, there's not much to... Its price is based on completely just its potential future outlook. So it looks like, there must have been some good news that came up or some hype, and then they sold off that hype, and now it's at this new level. I'm assuming with this company, it has some great prospects, but the fact that it has a well over $1 billion market cap, so it probably has good odds of seeing something happen. But I wouldn't, fundamental-wise, you can't expect this company to blow up until they actually show those results and, you know, show the money coming in and the profits and things like that, which could take years, but you just can't expect that until the numbers are there. That it might happen beforehand because of hype and excitement around the company, but, you know, it's just how it works. You know, some things get hyped and some things don't. Oh, let's listen to this guy. I think he was pretty good last time.
Ability. And what it seems like we're having here is this debate about whether we are going to have access, and that really is part of it. You know, and gamification has been pointed to and blamed in many ways. Yeah, I'm here watching Business Channel while we're in the middle of this hearing, and I got to tell you, I counted. There was 7 different moving parts on that screen at one point. 7. Now, 10 years ago, that would have given us all a headache. Now we expect that kind of thing. Same thing. I've got kids who are millennials, and I love movies. Well, I think they ought to go see some of the classics. And 30 minutes into it, they're like, "This is boring. You thought this was exciting, right?" Expectations have changed. The same is happening with their own investments. We shouldn't be looking at investing as something that only grandma and grandpa do. It should be approachable and accessible and safe. And we have to make sure that we are distinguishing between eye candy and malicious intent. And what I'm hearing a number of folks talk about is that eye candy equals malicious intent. And that simply isn't the case. So, Mr. Pivovar, I do have a quick question for you on sort of that subject. While you were at the SEC, and your knowledge, has the SEC ever regulated on advertising style or on product delivery platform?
So he's talking about the gamification.
Thank you, Congressman, for that question.
Of Robinhood.
There are certain advertising rules that the SEC has with respect to things like past returns and investment performance, say in mutual funds and things like that. But to your question directly on platform itself, no.
Advertisement, right? Not too many blinking lights, not too much movement, no confetti. That's not something that has to do with materiality, correct?
That's not something that we looked at when I was at the commission. Okay.
I've got a couple of things I want to hit on. The FTT, the financial transaction tax, the payment for order flow versus a rebate system, that maker-taker system, and then also the T3 going to T2 to T1. So let's see if we can get to those. Mr. Grujic, what would be the effect of an FTT, of a financial transaction tax?
The benefits would have to be defined. The cost would be that it would increase, obviously, the cost of transacting. That would decrease the number of transactions and the liquidity in the market. That's just an effect of having any kind of a friction. So you would get some amount of decreased liquidity, some amount of decreased transactions, and some amount of loss of signaling of optimal prices, because there would be certain price points at which people wouldn't participate because the tax would price them out. The size of the tax matters.
Okay, Mr. Pivovar, has this, while you were at the SEC, did you guys ever do a study on this?
On financial transaction taxes, no. But when I was in the White House during the Obama administration, I was asked to do a memo to some senior advisors. And based upon that memo and some other information, they decided not to pursue a financial transaction for the reasons Mr. Grujic pointed out.
I'd suggest you trot that back out. So with that, I yield back.
Thank you. The gentleman from Colorado, Mr. Perlmutter, who is also the chair of the Subcommittee on Consumer Protection and Financial Institutions, is now recognized for 5 minutes.
Thank you, Madam Chair. And Mr. Huizinga was talking about classical movies, and this whole GameStop thing reminds me of 2 classics. One is The Sting, and the other is The Producers. So The Sting, somebody had a little information earlier than the rest of the folks and was able to parlay that into some wins. And The Producers was about overselling a position. So I want to start with overselling a position. So Mr. Kelleher, In the previous hearing, and I think Mr. Luke DeMeyer was right on point, and I really want to understand this area. In the previous hearing, I asked Mr. Plotkin of Melvin Capital whether his firm was ever naked short selling on GameStop stock, and he said, no, the systems won't even allow that. That would be impossible for us to do. Yet according to a report from Bloomberg Government, which analyzed the SEC data, $359 million of GameStop shares failed to deliver or be covered, suggesting many of the shares had been borrowed more than once. I think truthful, but can you explain what's happening when so many shares fail to deliver?
I am very
Sure,
curious
thank you
about
for your
this.
question. You know, the current regulation only requires broker-dealers to have a reasonable, or institutional investors have a reasonable ground to believe the security can be borrowed so that it can be delivered on the delivery date. So it's a reasonable belief. Now, I don't know about Mr. Plotkin's system, although it sounded like a pretty good system when he said it, which is he says unless his firm has identified, in fact, the security and to have it deliverable, it doesn't even allow them to short a position. But that's not actually the law, as I understand it. As I understand it, it's a reasonable belief, and people can have a lot of reasonable beliefs. And we have massive failures to deliver of GameStop stock in January. So not only do we have a short position that exceeds about 140% of the available float at the time, but then subsequently we have a massive failure to deliver those securities at the time of delivery. So, and I'm sure, as Mr. PLTR said earlier, the SEC is looking carefully at this, and I would expect their report to provide us with a lot more information. But as of right now, the publicly available information certainly indicates that there's a very high likelihood of some abusive short selling by somebody.
All right, so let me ask you this. So, I mean, Mr. Luke DeMeyer talked about sales 140% of existing shares. I mean, how does that happen?
Well, in the securities lending business, it happens because somebody lends a security to somebody who lends it to somebody else to lends it to somebody else. It goes by the technical name of rehypothecation. And what it does is you have this cascade effect where you, in fact, have the same security lent out multiple times. And then arguably you have short sellers having a reasonable belief at a period in time that that's the security that they could reasonably deliver at the delivery date. The problem is that that security has now moved to somebody else who has a reasonable belief that that very same security is the one he can deliver or she can deliver. And so the way the system works now, it's almost a house of cards. And I agree with several of the witnesses who said one of the things that needs to be understood and disclosed at a much more granular level is not only the activities of the short sellers, but we need to have greater disclosure and granular knowledge of what's happening in the securities lending market.
Thank you for that answer. So let me go to something else that's kind of old time. And in Colorado years ago, we faced dealing with penny stocks and manipulation of the market with penny stocks. And what we're dealing with here in GameStop and some of these others, very low dollar value initially kinds of stocks. Is there any limit to when something is delisted, Mr. PLTR? I don't know. I mean, should GameStop have been put on the pink slips at some point?
Thank you, Congressman, for that question. I may also defer to Mr. Blogrun for this, because the choice of listing and standards and delisting of stocks, as long as they meet all the SEC disclosure requirements based on the price, is up to the exchanges themselves. And they have, very, transparent rules on those sorts of things. So I'd leave that up to the exchanges to comment on that.
Thanks, Madam Chair. My time has expired.
So that was very insightful, because I've been curious about the fail to delivers, and we haven't gotten very good explanations very many times. But I didn't realize that the actual law was to have a reasonable belief that the shares that they are borrowing they can find the true owner to. That's it, because that makes it so obvious that if shares are lended multiple times, each person who's lending that share has a reasonable belief that they can lend that share, because they think that this is the share itself. That they don't know if this share has been lent 5 times before that. All they know is they have this share, and they can lend that share. So that reasonable belief law obviously allows for the fact that a short position or a short ratio can be over 100% without exact malintent. Of course, it could happen with malintent as well, but you just don't know. And it popped into my mind that this could be a perfect use case for NFTs, non-fungible tokens, because then you can have the digital ownership that can be traced back to a ledger to show, like, oh, is this in fact the share, or is this a share that has already been borrowed 5 times? What is the original share? That seems like a perfect use case for an NFT. Also, they were saying that the lending out of the same security multiple times is called rehypothecation. Never heard that word before, so that's kind of interesting. But yeah, that was actually probably the best single 5-minute section that I've seen so far.
Would that have resulted in less capital required by Robinhood, and would it have then resulted in allowing some of those retail investors whose opportunities to have a buy order were cut off to keep buying the stock?
In a short answer, yes. And more importantly, it would have taken additional risks out of the system. So the longer the settlement cycle, the more market risk, counterparty risk, liquidity risk that you have from failures to deliver. So one side of the trade doesn't get either the securities or the cash delivered, and maybe the market has moved against them, and so there's an adverse selection problem that's there. And then also systemic risk is taken out of the system to the extent that you have a large number of delivery failures within the clearinghouse across a number of brokers. But as you shorten the trade into the settlement cycle, I think, as Mr. Gruchik pointed out, is that you also run the risk of, if you try to get too close to settlement, to real-time settlement, you potentially have the operational risk. And the reason for that is you have to have multiple systems that have to be operating at exactly the same way. In terms of why are we at T+2? Well, I'll raise my hand. It was me. When I was acting chairman of the SEC, I brought us from T+3 to T+2. At that time, 4 years ago, going from 3 to 2 based on cost-benefit analysis was the easy regulatory layup or slam dunk, whatever analogy you want to use. But we also recognized in our final rule that technologies change, markets change, and it would probably get to the point where we should probably move to T+1, potentially consider real-time settlement, although I think that's probably a bridge too far. So in the final rule, we directed the staff to conduct a study of potentially moving to T+1, also looking backwards and seeing what were the benefits exactly of T+2, and do
If you're wondering what he's saying with that T plus business, T+1 is 1 day settlement time, transaction plus 1 day, T+2 transaction plus 2 days, T+3 transaction plus 3 days.
letter to the SEC to release that study. So I think this is definitely something they should put out in the public domain, and we should have a debate about.
And for sure, we're closer to being ready for T+1, maybe not real time settlement, because there are some issues around that, but T+1 would have helped solve this problem. Let's take another step backward, Mr. Beauvoir, about retail investors and the fact that with some of these new apps and with zero commission trading and partial share trading, you're seeing more retail investors have an opportunity into the markets. Isn't that a good thing?
Yes, to the extent that their brokers are complying with all the federal securities laws, absolutely it's a good thing, right? And there's often a comparison made to the fact that, you know, retail investors on average, when they trade on their own, maybe overtrade a little bit, maybe don't do as well as if they were to put their money into passive index funds. You have to remember, first of all, that's an average, right? There are some investors that do quite well and some that don't do so well. There's also the opportunity for younger Americans to learn that maybe they have an aptitude for trading, or maybe this is a career for them that they otherwise would not have expected, right? Maybe 10 years from now, we'll be seeing an interviewer, somebody interviewing the top hedge fund manager on CNBC, and they say, well, how'd you learn to trade? And they say, well, I learned to trade from one of these trading apps and found I had an aptitude for it. So there's a lot of benefits from demand. And then also, obviously, for saving for retirement. People learn over time from their mistakes, and then maybe move into more passive investments that are better for them. But there's no substitute for learning.
Thank you.
I yield back that.
The gentleman from Connecticut, Mr. Himes, who is also the chair of the Subcommittee on National Security, International Development, and Monetary Policy, is now recognized
This
for
one
5
should be
minutes.
pretty good, I
Mr.
think.
Chairman, you have the gavel.
If he's actually the chair.
Thank you, Madam Chair, and thanks very much to our witnesses. Very interesting conversation. And I'm really excited to follow up on Mr. Stiver's line of questioning. He asked, didn't retail investors win? And Mr. Pivovar had a view of that, and I want to explore it a little bit because I really think that education here is important. So I want to devote a couple of minutes to that. Are retail investors winning when they trade on any platform? And let me be very clear so that nobody lights themselves on fire right now. I certainly support the right of people to do what they want with their money. I can go to the window behind me and peel out $10 bills and throw them out the window. I can drive 20 minutes and be in a casino where I know I will lose money a little bit more slowly than throwing it out a window, but assuredly I will lose money. So look, we're a free country. People have a right to do what they want. But that's not what we're talking about here. What we're talking about is investing in savings. And I keep hearing people say that this is about building wealth and saving for education. So I want to figure out whether what we're talking about here is saving and investing, or whether it is gambling, which was a word that was sort of somebody cast shade on that word. By the way, I think we may be a little complicit in this. We were all excited. Let them trade, we said. And we featured Mr. Keith Gill, a retail trader known as Cat or something, who apparently made some money. But
Known as Cat
I've
or
reviewed
something.
the literature here. There is no ambiguity. I've looked at the academic studies. I won't list them all, but Dalbar's got one out there, Barker and Odine. It's very, very clear what happens when retail investors trade a lot. Mr. Kelleher, in terms that the folks watching at home can understand, what happens when retail investors trade a lot?
They lose, and they lose consistently. And they lose because they're paying more for every single one of their orders, because we have a order routing system that is intentionally complex and designed to extract the maximum amount of wealth from the retail investor. And
But
that's
it's not
why
just that, Mr. Keller. I'm sorry, let me interrupt you. Thank you. That's what I thought you would say. But it's not just the structure of the system, right? When you look at the literature, retail investors lose because of a whole series of human biases, because they don't have teams of PhDs studying the stocks that they're buying, right?
Well, absolutely. It's like saying that let's send a local little league team up against the New York Yankees or the Boston Red Sox or the LA Dodgers. Frankly, you have these institutions that have maximum informational advantage, maximum technological advantage, maximum sophistication. They get to use all of that they have paid billions for the purposes of extracting wealth.
Right. And Mr. Pivovar's not wrong, right? I mean, there's going to be a distribution curve here. There will be some people who get lucky or who are at the narrow end of the curve or who do win. But on average, retail, again, for the folks at home, the more a retail investor trades, the less well they're going to do from an investment and saving standpoint, right? There's no ambiguity in the literature about that, is there?
None at all.
Okay, so this leads me to my second question. Mr. Tenev, who runs Robinhood, annoyed me a little bit because he told this committee that his customers made $35 billion. Mr. Arnott, you're a trader. If I told you that last year my portfolio made $3,500, would you be impressed?
No, I wouldn't. And what's really interesting about the individual anecdotes is everyone's got an anecdote. I have a young man who's very close to my family call me up saying on Robinhood, he bought a certain stock much higher, and he asked me my advice for what he should do. And he asked me specifically, should I put out a put? And I said, do you even know what a put is? Do you know how to trade options? He's like, yeah, I'm enabled to trade options. I said, what's a put? He said, it's when you put out stock for sale. All right. So the very problem here is that we have a broker dealer that's abandoned its suitability, its education and its suitability requirements. And it's done so because it has this massive incentive to do so.
Okay, I got to thank you. I appreciate that. By the way, do any of the witnesses quibble with the conclusion that I think I've been able to tease out here? that the literature shows that lots of trading by retail investors is really not going to be a wise investment strategy in the aggregate. Do any of the witnesses dispute that? Okay, hearing none.
I'm not
Look,
sure
let me
what
be
he's
clear
trying to
again
get
here.
at point-wise here,
I
though.
believe that Americans should have the right to do with their money what they will. But, and let me close, Mr. Arnick, since you're an investor, what's a smart strategy for a retail investor who actually wants to make money and save and invest successfully?
I don't know if I should answer. You should have dollar cost average monthly into Vanguard index funds and buy and hold.
Thank you. I yield back the balance of my time.
Gentleman's time has expired. I recognize Mr. Barr from Kentucky.
Thank you, Mr. Chairman. I have to say this is an interesting.
I mean, we have to agree, at least on the short term, a retail investor, even an institutional investor, if you keep making short-term bets, you're probably not going to win in the long run. If you're willing to do your due diligence up front and then make bets based on that due diligence for a long-term hold, your odds are much higher. If you want a consistent, pretty good returns, yeah, S&P 500 dollar cost average. I mean, he's not saying anything that isn't unknown. Yeah, a retail investor has less information than a huge institutional investor. We all know that. We might not get the best transaction price. You know, you might get a penny, 2 pennies less per share, or have to pay 2 pennies more per share. But if you're doing your due diligence up front, buying into a good company and holding long term, that's a total different thing than, you know, trying to day trade or, you know, win on a short-term investment, just in my opinion.
Majority has concocted a series of villains in this saga. The first, it was the hedge funds who supposedly collaborated and colluded with Robinhood. Then it was the practice of short selling. Then it was payment for order flow. Now it's the so-called gamification of investing, as if creating user-friendly platforms that attract wider swaths of investors is a bad thing. Provided that no securities laws are broken or consumer protections are compromised, it's not the role of Congress or regulators to dictate the constructs of a user experience. If investors like the platform, it will succeed. If they don't, it won't. Mr. Pivovar, how might additional poorly tailored regulations on financial technology like app-based investment platforms slow the expansion of retail investor participation in the capital markets?
Yes, thank you, Congressman Barr, for that question. One of the concerns about slowing down access for retail investors is the equitable access. What disparate impact will it have on low-income households who are already put at a disadvantage from the accredited investor definition? And if I may just address, I think there's a straw man argument brought up by Congressman Hines. There's not this world where people are putting all their money into a Robinhood app and trading all of their portfolio all the time, or they're putting all their money into a Vanguard index fund. What we see is that a lot of investors are very sophisticated. They put some of their money into passive index funds, low cost, and then take a little bit of it and try to generate a little bit of alpha and see how good they are at it. And some win.
Mr. Pivovar, that's a very good point, and I think we shortchange the intelligence of some of these retail investors when we just assume that they are not diversified. Let me ask you another question about payment for order flow. Would restrictions on payment for order flow or an outright ban on payment for order flow impact price improvement for retail investors, and if so, what would that impact be?
Well, so the first likely event we're going to see is that we're going to return to commission-based trading. Free commission trading would go away. Again, that would have different impact. And the second point I would make is that if we're back into a world where there's another conflict of interest, and that's the churning of accounts in order to generate commissions, right? So it's been said in the testimony that there's an incentive to generate revenue by more trading for payment for order flow. That same incentive exists in a world where you have commission-based trading. And in a prior part of my career, I actually worked as an expert witness on behalf of plaintiffs who were arbitrating against in broker customer disputes in a FINRA arbitration for churning accounts. And so, again, that's another thing that just has to be monitored for compliance and enforced.
And I don't have time to ask the question to Mr. Grujic again, but I think his point about forcing a combination of retail and institutional flow will have a negative impact on price improvement for retail investors. And I think that stands repeating and an unintentional consequence of excessive restrictions on PFOF. Final question. Mr. Pivovar. Mr. Kelleher and some of the other witnesses have argued today that existing best execution requirements do not sufficiently address what they consider to be conflicts of interest associated with payment for order flow. Do you agree? And has payment for order flow in any way canceled broker-dealers' duties to route customer orders to achieve best execution?
So the answer to your last question is no, they have not canceled that. What I've said in my testimony is that, of course, the SEC should revisit its best execution rule in light of zero commission trading. Best execution is a multi-factor, multi-dimensional thing that the SEC looks at. And so markets change, markets evolve, technology evolves. Of course, the SEC has to revisit that. But there's been no diminishing of it. In fact, the SEC vigorously enforces the best execution rule.
Thank you. My time has expired. I yield.
Thank you. I ask unanimous consent to put in the record a 2016 report from the Chartered Financial Analyst Institute that found that following the UK's ban on payment for order flow in 2012, the portion of resale size trades executing at the best quoted price went up substantially, and I recognize Mr. Vargas, my colleague from California.
Thank you very much, Mr. Chair. And again, I want to thank all the witnesses for being here. I heard a speech toward the beginning of this hearing that we Democrats want to, quote, enhance inequalities. And I always find that an amazing and staggering quote when my good friends on the other side of the aisle give a $1.9 trillion tax giveaway to the wealthiest Americans. I always find that interesting. And the other notion that somehow we're paternalistic and we shouldn't, we should allow people to trade and, you know, to be able to do all these things, which I agree with. But however, here we have a defined benefit plan in Congress where we can't make those decisions. So I always find that interesting. Now, there seems to be an inherent conflict in this payment for order flow, that the retail investors get the worst execution. And I'll quote some of the statements made here today. It's really a wealth extractor for the few. Legalized kickbacks coming from retail investors. So Mr. Arnott, should we prohibit payment for order flow? We just heard something put into the record by my good friend, Congressman Brad Sherman. So should we prohibit it?
Thank you for the question, Congressman. I absolutely believe we should ban payment for order flow in all its forms. It distorts order routing. It distorts order routing on exchanges. It distorts order routing and best execution in the off-exchange markets as well. Consider this. Robinhood, with its carrot of payment for order flow, has a duty to get best execution, as well as the suitability I referred to earlier. But to get that best execution, they would need to access the 20% of New York Stock Exchange midpoint orders that are the 50% of the orders and trades that take place in the market that are odd lots, which are predominantly what so many of the Robinhood traders are trading due to their small account size. Yet, why can't Robinhood do that? Because they aren't even connected to any of the exchanges. The only relationships that they've developed are wholesaler relationships where they receive payment for directing orders to high-speed market makers uniquely tooled to profit over those orders.
Thank you.
So if you're wondering what payment for order flow is, basically instead of Robinhood charging you $10 or whatever it is to make an order of stock, they route their orders through a company like Citadel. Citadel pays them to be able to process their orders. What Citadel does is try and get the best price possible for that stock. If they find a better price, then they get to pocket the difference between that better price and the listed price that the user thinks that they're going to get. And then they make money, they send Robinhood some money. That's how those companies make money. It results in a slightly worse order price because, of course, the Citadel or whoever the market maker is in this case is pocketing the difference and Robinhood is getting paid. So it's kind of up in the air as to which is better. If you're doing really big orders, it's probably better just to pay a fee, a $10 fee or whatever. But if you're doing small orders, maybe it's still better to do payment for order flow because maybe you're giving away a couple pennies. It's of course an interesting debate.
It's according to the NBBO, but the NBBO only reflects about 40% of total orders. And the least liquid market that there
this
is
stock
at the
markets with
time right
Bruce?
now, which is the lit markets. And Mr.
I think it
Arnott is
might be.
right. It doesn't include odd lots, and it doesn't include, by the way, gray market, hidden trades, also the 20% of the market. So what they're saying is we do great things. You can look at this. We do price improvement. We do better than the NBBO. But both of those benchmarks are misleading, if not intentionally false, and the SEC should take the position that that violates the duty of best execution today.
Let me ask Ms. Goldstein, would you agree?
Congressman, it's a great question. I think that, there are a number of ways to approach this problem. I think you could prohibit payment for order flow. I also think that you could ask that brokers have to pass on payment for order flow to their customers, or allow their customers to opt out of payment for order flow. So I don't know that there's a single solution for how we address this, but I do think that it does need to be addressed in some way.
So let me go to Mr. Lagren. How about yourself? You represent an exchange. Should we prohibit it?
I think there's a real public interest in having the broadest set of market participants interact with one another from an order flow perspective. That being said, I think the SEC has announced their plans to study the question of whether payment for order flow is consistent with best execution obligations, and we look forward to reviewing their findings.
Thank you very much.
I see our chairwoman has returned, and I'm happy to return the gavel to her.
She's back.
Madam Chair?
One moment, please.
Okay.
Who's up next, Mr. Chairman?
It's been suggested to me that at the request of one of our witnesses that we take a 5-minute break. We can do that, or we can move on.
Without objection, let us take the 5-minute break.
She's like, let's take a break. All right, let me just leave this up while we look at some stonks over here. She's like, please, let's take a break. Okay. Palantir, it's a little bit up. It was, I think, negative 3.5, and we were just looking at it. Bitcoin looks like it's gone up a tad. Let's see here. We're on the day view. Let's go down to the 1 minute. Okay, it looks like it might be crawling upwards, crawling out of the depths. I wonder if I've broke even now on my purchase yesterday. If anyone cares to know, let's do a little quick search. Let's see, portfolio. Oh, it's pretty much unchanged. It's gone up $200 or something like that. This is my purchase yesterday. After the transaction fees, I'm down $80 or something like that. I'm not too worried about it. But it looks like it's crawling upwards. It's on a good upwards trend. For those of you who were considering a good buy-in point, I'd say now is probably still a good buy-in point. Same with Palantir. If you're looking for a good buy-in on Palantir, there you go. Oh, also, we changed up the Discord a little bit more, so you can now, whether you have a membership or not, you can be a part of the Discord. It's just limited as to which threads you can see. So there's a general thread that is open to absolutely everyone. If you're a level 1 member, you get the private chat that is only just members. There's one chat for just members, and then if you're a level 2 member, you get everything, which is like 20 different threads. So I know a lot of people have been joining, and we're just trying to build this thing out and fine tune it. And thank you to Bullish Barbarians, who's helped me out as well by modding and helping turn this thing into a community. So go ahead and become a member and connect your Discord account, and you'll have access to all that. The Discord link is in the description. All right, let's see here. Plug Financials. Let's look at that. I haven't heard anything about this yet. So let's see. check out the news here. Plug Power to restate financials. Okay. It says their stock price has plummeted. How much has it plummeted? It's down 15%. Okay. All right. Shares of Plug Power plummeted more than 11%, now more than 15%. After hours trade Tuesday, after this fuel cell company said it would restate financial results going back to 2018. Oh, geez. Plug Power said in a news release that it will restate those financials for fiscal years 2018, 2019, and its quarterly filings for 2019, 2020, which will be disclosed in the Form 10-K at the year ended December 31st, 2020. KPMG, the company's accounting firm, management, and the audit committee of Plug Power's board of directors determined that the company's prior period financial statements need to be restated due to errors in accounting primarily related to several non-cash items, including the reported book value of right-to-use assets and related finance obligations, loss accruals for certain service contracts, the impairment of certain long-lived assets, and the classification of certain costs, resulting in a decrease in research and development expense and a corresponding increase in the cost of revenue. I mean, it seems odd to me that they would have to go back and fix this unless there was a major issue. So the reported book value of the right-to-use assets and related finance obligations. Let me just double check what So, just so we can all learn here, what is a right of use asset? A right of use asset pertains to a lessee's or lessee, however you want to say it, right to occupy, operate, or hold a leased asset during the rental period. In the old lease standard, an asset, for example, a cargo truck, will be recorded straight under the balance sheet. However, the new standard requires the recording of the actual right to use asset, such as the cargo truck, rather than the actual asset. This means that the right to use asset is an intangible asset. Here's how you can calculate it. Here's a right of use asset calculation example. 6-year rental period without renewal options. $40,000 lease payment required at the end of each year. Right of use asset increased by 9%, the incremental borrowing fee. Initial direct cost is $2,000. To get the lease liability is equal to the present value of the 6 payments that are discounted at 9%. The resulting amount will be $179,000.
Thank you, Mr. Chairman.
We're back on here with the testimony.
Of 82, and the Dow Jones proceeded to crash by 26%. On January 28th, the day that we have now dedicated 2 full committee hearings towards, and with more planned in the coming months, the VIX was in the 30s, and the change in the overall market barely even registered. So while a few stocks such as GameStop may have seen some historic individual metrics in January, none of these individual securities appear to have posed a systematic risk to the markets as a whole. So rather than pursuing radical changes to our capital market structure, we should be looking at the very tailored issue that prevented retail investors from placing trades on securities that they owned when they wanted to. So, Commissioner Pivovar, can you discuss your views about how changes to market structure should be done, and if it makes sense for Congress to step in now, instead of waiting for the SEC study that issue and go through a thorough rule-making process with a cost-benefit analysis?
Thank you, Congressman, for that question. Having served both on the staff of the Senate Banking Committee and also serving at the Commission, I feel like I can address this question. Because markets and technologies change all the time, I believe the SEC is better positioned to look at these changes and put it through their cost-benefit analysis. So the SEC is bound by statute, by a number of statutes, to take into account the costs and benefits of various alternatives that are out there, including the baseline scenario of what the existing situation is. So, for example, shortening the trade settlement cycle. The current situation is T+1, and they could evaluate that through the lens of cost-benefit analysis and say, well, what would be the relative costs and benefits of going or at T+2, what would be the relative costs and benefits of going to T+1 or T0, and explicitly look at those. Same thing in payment for order flow. They could look at likely effects. They can get the benefit from market participants, investors, academics, take all of that information in and adjust their regulations accordingly within the broad context of the federal securities laws. Now, that does not mean Congress doesn't have a role here. I think you all have a very important role here. To the extent that you think any of these market structure or market infrastructure policy changes should be prioritized by the Commission, I believe that would be an important role for this committee to try to come together and find consensus on what are the 2, 3, 4 most important areas for the SEC to focus on, because as you know, you've given them a broad mission with broad authority, sometimes for prioritizing those.
Okay, thank you for that.
So
Secondly,
you want to find out what happened with
any
the
American to be able to put
progressive
some of their hard-earned paychecks in the stock market and have the same ability to succeed as any large institutional investor. Unfortunately, many Americans believe that the system will always be rigged against them, and they have no way to compete against the big players after watching this situation play out. Whether that view is warranted or not, we need to be working to continue to empower the retail investors. So, Mr. Blogren, I know there has been a lot of conversations around access to market data. Can you talk about the New York Stock Exchange and what it's doing to get better market data into the hands of the average American looking to make more informed investment decisions?
Thank you for the question, Congressman. NYSE publishes market data
Thank you for the question.
through the consolidated tape, which is an industry-wide utility, and also through proprietary market data products. All of these products are filed with the SEC, available broadly and according to a standard rate card. In general, the retail community consumes market data through the consolidated tape, which has largely kept prices steady for many years. The retail investor typically has their market data paid for by the broker, and it costs about $1 a month. Market data is now consolidated in a matter of about a dozen microseconds by NYSE and NASDAQ systems, and then rebroadcast to the retail community.
Thank you for that answer. And Mr. Chairman, I yield my time back.
Thank you. Mr. Lawson of Florida is recognized.
Okay, thank you, Mr. Chair, Madam Chair, and welcome all of the members to this panel today. And this question I have for the whole panel. Citadel Security reportedly handles almost as much trading volume as NASDAQ. Further, Citadel Securities, along with the market maker Virtu Financial, account for more of the overall equity market than the New York Stock Exchange. With respect to Citadel, some have raised concerns about a single market maker managing such a large volume of retail order flow and what that means in terms of pricing. Others have questioned whether Citadel have such dominance in financial markets that it poses a static risk, symmetric risk to our entire.
All right, we're going to pop off this for a little while. I'll keep listening to it. If something interesting comes up, I'll
Hi,
pull it back
Congressman,
over.
if I may, this is
Allow
Mike
me to
Dubois,
be
if I may.
your filter for
having
you.
been served as acting chairman and sat on Financial Stability Oversight Council and met with the other principals and the deputies that look through
So what do we got going
and
on
look at sources of
here?
systemic risk. I don't have any concerns
Not
that
a whole lot of change.
market making business poses any
I
systemic
wanted
risk
to
the system. And the
dig
reason
into
for that is,
Cardano a little bit
even
because
though
I'm
we
not
are a
super.
dominant player right now, we have to look at what would be the scenario if they failed. And the concerns that we have for systemic risk ultimately go to cascading
Not
failures.
super
And what we really
familiar
ultimately worry
with
about is whether the
Cardano, but I
banks
know
fail
it's getting
because
more
they're
and more
stressed.
popular. So let's
In the
all
case of SNDL securities, if their
learn
market-making
about
function were to cease,
Cardano.
let's say tomorrow, what would we see?
All right, let's see here. See what they're all about. Can't hear me? My mic is on. Let me know. Let me know if you can hear me now. Okay, cool. Discover, let's see. Platform built for sustainable future to help people work better together, trust one another. Technology. Cardano brings a new standard in technology, open and inclusive to challenge. Maybe we can find I'd like to see a pros and cons. Among Cardano's pros are a great development team, unlimited scalability potential, quick and cheap transactions with ADA cryptocurrency, and a fair consensus mechanism and the possibility to create decentralized applications. Cardano's drawbacks include the fact that the blockchain is still under development, needs to improve its scalability issues, and it's only capable of processing 257 transactions per second. Also, it has problems with the official wallet sync and network connectivity. Another issue is the double spending or 51% attack, as there is still danger that the input endorsers may approve the same set of transactions from two different slot leaders. I need to just become an expert in crypto. I think I've decided I need to really start digging into this. Is it good to invest? Okay, enough of that. All right, we're done with that website. All right, we'll see what this person says. There are reasons as to why they prefer ADA over, which is Cardano, over Polkadot. Nominators and delegators, 60% supply on 7,000 delegators/nominators. Cardano has over 72% of the supply. I feel like I don't know enough to... I just need to learn more about this. Probably shouldn't be doing this live. I'll dig into some more research on there and come up with a consensus. Unless you guys like this, I guess we can do research live, but I feel like it might be kind of boring. If you have any questions or anything like that, I'd be happy to address questions while I drink some coffee. God, Bill will teach you. Thoughts on Dropbox? Can't seem to break the 27s. Let's see here. All right, so we saw some upwards consolidation. So with Dropbox, I mean, it just saw a big price increase in the last few days. It was at about $25.50, hit a peak of $28.33. I probably should zoom out a little further. All right, so let's look at the last few days. All right, so this is when I started digging into it. It's had a nice little run since then. We have to remember, at least based off of my analysis of Dropbox, it's a long-term deal. It's had a history of an up and down stock price. So we can kind of expect that to keep happening. We just want that to trend upwards. And I think that will in the long term. I think we still have a 20 to 25% increase in price that we're looking at in the next year for this stock. And then you could reliably expect that thing to go up 15% for the next few years after that, conservatively. Now, this isn't one of those ultra exciting, let's 5x this thing in 6 months kind of deal, but it's stable. It's a company that's been around for a while. They're inching closer and closer to profitability, but it's a company where you can't be upset that, you know, it's not breaking $28 in a week or something like that. It might take a while to break those price points. Oh, Coinbase will start trading ADA Cardano tomorrow. Interesting. Okay, so we have a few people who like the live research. I just don't want it to be overly boring. Someone says, how much coffee is that? It's a half gallon, but this is only half full, so it's only a quarter gallon of coffee. Someone says, do I agree with Bruce or disagree with Bruce? I guess I'm curious as to which points exactly. I think everyone is entitled to their own opinions. If he has opinions on certain stocks, that's fine. That's great. Let's see here. Maybe we can find a good video breaking down Cardano. That might be the best way to do it. Let's see if I can find, let me change the title too, so people don't come into this stream expecting a testimony and then we're talking about crypto. I have thought about starting a second channel and doing streams whenever I'm doing a deep dive into a company and just streaming my deep dive as I'm building up all my information to then do a video on it. I know there's probably a few people who'd be interested in that, but most wouldn't, so I'd just do that on a second channel. But it's a thought that I've had. All right. Let's start off real simply. What is Cardano?
Chris with Exodus. We're going to take a few minutes to explore Cardano ADA, a project that began in 2015 and
well, it's called Cardano ADA. I already learned something. It's not ADA. So there we go.
A lot of attention, not just because of its ambitious plans to create an internet of blockchains, but because of its jump from around 2 cents in late 2017 to nearly $1.30 at the beginning of 2018. This parabolic price increase was, of course, not sustainable, and ADA's price has since declined to around 3 cents as of April 2020. If you're a Cardano ADA holder, at which price did you buy? And what is your Cardano price prediction? Let us know your answer in the comments. So what exactly is Cardano? And what is ADA? There isn't one simple answer to the question.
So I had to address a question here real quick. Greg in the chat said, or no, sorry, not Greg. Noah here. I have all my crypto in Robinhood. Thoughts on pulling it out and going into Coinbase. So I'm not a big fan of holding your crypto in Webull or Robinhood or anywhere where it's free to trade, because you don't actually own that crypto. It's like a derivative of that crypto. You can't store it offline. You can't store it in a cold wallet. Like, I think it's much better to hold it in a place like Coinbase or something like that. Someone's saying that this audio isn't good. Let me know if anyone else is having that same problem.
What is Cardano? First of all, Cardano and ADA are two different things. Cardano is a blockchain, while ADA is a cryptocurrency that lives on the Cardano blockchain. In other words, Cardano is a home to the ADA cryptocurrency. And while the Cardano blockchain can be used to send and receive ADA, it will also host smart contracts and applications. Now, this may remind some of us of Ethereum, since it does the same thing. And in fact, Cardano shares many of its roots with Ethereum. But although it's similar to Ethereum, Cardano's smart contract platform operates much differently. Let's jump right in. It's not enough to simply say ADA lives on the Cardano blockchain. ADA is a proof of stake coin that fuels Cardano. Its purpose is to provide a quick and secure transfer of value and to allow users to operate smart contracts and applications. The maximum supply of ADA coins that will ever be created is capped at 45 billion. The current circulating supply is 31 billion ADA coins. New coins enter the ecosystem, and nodes validate transactions through a consensus algorithm called, now I hope I get this right, Ouroboros proof of stake. I'm going to throw out some technical lingo here, but stick with me. It's not as complicated as it may sound. In this protocol, nodes who earn a position as slot leaders generate new blocks in the blockchain and verify the transactions. In this case, Cardano slot leaders perform functions much like Bitcoin miners do. Anyone holding ADA can be a stakeholder and become a slot leader. You become a slot leader and publish new blocks to the network when Cardano's consensus algorithm selects a coin that you hold.
I'm writing down questions to research
generate or mint
more
a new block with
in
a
depth.
probability proportional to the amount of coins this node has. If a node has any amount of ADA staked, it's called a stakeholder. If a node eventually becomes chosen to mint a new block, it's called a slot leader. What this simply means is, the more Cardano you hold, the greater the opportunity is to become a slot leader and receive rewards. Now that we know a little something about ADA and its purpose, let's dive a little further into the Cardano blockchain. Cardano is being developed in 2 layers. This layered architecture is one of the key features that makes Cardano unique. First is the Cardano settlement layer, which acts as the balance ledger and runs the transfer of ADA tokens. The other separate layer is the Cardano computation layer, which contains all the information on why transactions occur. It's this layer that runs Cardano smart contracts. The 2 layers separate the ledger of account values from the reason why the values are moved from one account to the other. In other words, ADA can be transferred from one account to another without the information from smart contracts going along for the ride. Why? Because this separation enables more flexibility for Cardano smart contracts. Since the computation layer is detached from the settlement layer, users of the computation layer can create rules to filter transactions based on the parameters that they set, such as a permissioned ledger that excludes transactions that don't include identification data, something that will become more important as the blockchain regulation continues to increase. Another key feature of Cardano will be the interoperability of blockchains. Think of this as the Internet of blockchains, an ecosystem where Bitcoin can flow into Ethereum and Ripple can seamlessly flow into Litecoin. One way that Cardano wants to do this is by implementing what's called sidechains. Sidechains would enable cross-chain transfers without any middlemen. Cardano supports sidechains based on a new protocol called the KMZ sidechain. The KMZ sidechain protocol allows funds to move securely from the computation layer to any blockchain that uses the same protocol. With this protocol, ledgers with certain regulatory compliances are able to interact with the settlement layer without having to share the data that needs to remain private. There's a lot more to go over, but our goal here was to provide a general overview of what makes Cardano different from other blockchains and cryptocurrencies. If you're
All right, so that was pretty illuminating, and I also have a lot of questions now. That video was by Exodus, so make sure to give them some love if you like that video. Let's do some. There's just some definitions that I wanted to figure out. Cardano slot leader. All right, somewhere that the slot leader is determined locally by the block producer node. Is that true? And if so, would that mean that there's a lottery on each BP node with a potentially conflicting outcome? When there are multiple BPs proposing a block for the same slot, how is it decided which one to take? I was also wondering whether it is known upfront when a BP is expected to do some work. If not every slot is equal, there would be good/bad times to do maintenance, i.e. take down a node for a while. I run a stake pool through the command line. I'm able to see the block allocation in the pool and the start of the epoch. Okay, we're getting a little too technical here to start off. Someone say max buying 10,000 Cardano tomorrow. One of a number of competing proof-of-stake blockchains, Cardano enables owners of ADA cryptocurrency to help operate its network and vote on changes to its software rules. So that's kind of cool. Likewise, developers can use Cardano blockchain for familiar features, including running custom programming logic, smart contracts, and building programs, decentralized applications. However, Cardano differs from the other project by emphasizing a research-driven approach to design, aiming to achieve an academic rigor it believes will propel adoption of its technology. How does it work? Okay, so we were just seeing this on the video. The Cardano settlement layer is used to transfer ADA between accounts and to record transactions. The Cardano computation layer, CCL, contains the smart contract logic that developers can leverage to programmatically move funds. Further, computers running Cardano software can join as one of three nodes. M-Core nodes stake ADA tokens and participate in blockchain governance. Relay nodes send data between M-Core nodes and the public internet, and edge nodes create cryptocurrency transactions. Ouroboros is the proof-of-stake consensus algorithm used by computers running the Cardano software to secure the network, validate transactions, and earn newly minted ADA. Ouroboros divides time into epochs and slots, where epochs, this is what I want to know, where epochs are the overarching time frames and slots are 20-second increments within epochs. Within each slot, a slot leader is randomly chosen and responsible for choosing the blocks that get added to the blockchain. One thing that I thought was really interesting was the cross-chain transfers. So they would allow you to transfer, Bitcoin for Ethereum or Bitcoin for ADA without having a middleman. And that would be absolutely massive. The efficiency, the savings on transaction fees. Let's see this. Slot leader can be selected by only coin tossing protocol. I've heard someone say in Cardano they vote for slot leader. Is the vote wrong? Can we delegate ownership though? You absolutely should make music for this channel, and I will play it if it's good. Yeah, this is the kind of question or kind of situation where it's like I don't even know what I don't know about Bitcoin. I need to go, or not Bitcoin, about cryptocurrencies. I need to go even further back into the basics and really get like a ultra deep understanding of this, because I think I would like to try and at least become an expert in this. Let's drop a chat on Trey's channel since he's live still. Maybe he's not live.
Come on. Oh, yeah. How about that, baby? We're a freaking genius. We are so good at this.
All right, we're going to just leave a comment here. All right, let's see what's going on here with AMC. Yeah, I should show Trey's live and he should show mine at the same time, just circling it back through. All right, what's going to happen here with Palantir today? Are we going to end up with a positive day? I mean, it would have to have some pushing. I mean, we do have some green volume right now. Volume's pretty low here for Palantir as well. Barely breaking the 100,000s in the minute increments, but we got a lot going on right here. So volume is, well, we'll see what the volume ends up to be. Bitcoin slowly pulling itself out of the pits today. Almost eking up to positive numbers. Kind of just like a flat, somewhat boring day here. What's a good entry point for Palantir? I mean, right now isn't a bad entry point, to be honest. You know, anything in the 24s isn't bad. When I started buying it, I was in the high 24s, which I guess that's what we're at right now. I was lucky enough to see a little dip and average down to 22.40, but I don't think 24 is a bad price to hop in. If you're going long term. Short term, I couldn't tell you what's going to happen short term. This thing could hit $40 next week, could hit $18 next week. I'm not really sure, but I think in a year from now, 2 years from now, it's going to be much, much higher than it is right now. So Bullish Barbarians is saying that Kraken supports ADA if anyone is interested in buying some ADA. I mostly just use Coinbase. It's probably the most popular one. And then I just use BlockFi to earn some interest on that. Can I get, what does it say? Can I get your thoughts on RYCEY? So this is like a OTC stock. Sure thing. Oh yeah, Rolls-Royce. Duh. So Rolls-Royce, I think their sales are decreasing. I know we've looked at this a little while ago. It's one of those companies where it's like, even though it's a cool company, it doesn't necessarily mean it's a company you want to buy into. So the 5-quarter sales trend, not looking ideal, trending downwards. 5-year trend, not as bad, but dipping pretty dramatically in 2020. Let's see what their price has done in the last year. So it had a big spike and then it's kind of back down to reality. So, excuse me. Oh, I forgot I have sparkling water over here. Cha-ching. Perfect. So it looks like it really hasn't recovered much since the pandemic dip here. My guess is it's probably because the less than subpar financials. So the negative net income in this case is very concerning to me because this isn't like a startup company. They've been around for a long time. They've had plenty of time to get profitable, and most of their years they're losing money. So that's a big concern in my. I personally wouldn't buy into Rolls-Royce, mostly because I like things that are going to do well long term. I'm willing to take a short bet as long as I have the backup plan of I can hold long term and still be okay. Can I look at UEC? Sure, I can. I'm not sure what you mean by agreement with Bruce. I think he's entitled to his opinion. That's fine. All right, so this is Uranium Energy Corporation, market cap of $692 million. Oh, they don't have sales yet. All right, let's see if we can find any information here real quick. America's emerging uranium producer. Now, bear in mind, it seems like they haven't produced anything yet, or at least they haven't sold anything yet. They must be building facilities. Yeah, so it looks like they're building facilities still. It's just, man, it's always, oh, it's in Arizona. There they have a location in Arizona. It's just always such a risk when they haven't even had any sales in yet. I would have to do much more of a deep dive to really get a firm understanding of their management, what the industry analysis is here. what the probability of success is for all these acquisitions they're making, institutional investors that are backing them, why this company has a lot of hype around it. I'd have to do a lot of digging to see if it's justified. And I just don't want to, in a 5-minute dig, give you an opinion. But besides, my opinion would be this is the kind of thing where you need to research a ton before you jump into it. Let's check back in this just for a minute here.
Convening this hearing and all the witnesses for joining us here today. I represent the Massachusetts 7th Congressional District, and like all districts across the country is reeling from the economic impacts of this pandemic. In Massachusetts, since February 2020, over 200,000 fewer people are employed. Children in 12% of households do not have enough food to eat, and many of the smallest businesses have permanently shuttered their doors. Research shows that following the 2008 recession, gambling and cheap lottery tickets increased among those who continued struggling financially. In this economic recovery, I'm concerned that Robinhood has positioned itself well to take advantage of this trend, but with much higher stakes for my lowest income constituents. Robinhood boasts that the platform is democratizing finance for the benefit of everyday Americans, positioning itself as the great equalizer of capitalism. Meanwhile, it's running targeted advertisements on social media that say, and I quote, "Millions of people will soon begin receiving stimulus checks. As you consider whether to spend, pay down debt, or save, we want you to be prepared." With a link back to their own blog, which says that, quote, "never investing at all is a missed opportunity." Many of my constituents now just have a $1,400 stimulus, or what I call survival check, in their bank account to get them through months of expenses, and are positioned to lose hundreds of thousands of dollars in options trading if they take that gamble. Ms. Goldstein, what do you make of these targeted advertisements under the guise of promoting financial literacy? Is Robinhood really increasing its own profits by attracting new users after many existing users left the platform due to the trading halt in GameStop?
Congresswoman, I have seen the same advertisements you are talking about. I keep getting them over and over again, in fact. And I do think that Robinhood, there was a survey that was done by Fortune in the wake of Robinhood freezing trading in GameStop and other meme stock names. And they found that some half of their users were considering leaving Robinhood for another brokerage in the wake of that. And so I absolutely think that Robinhood is looking to attract a new user base that hasn't previously perhaps participated in the financial markets, to account for what I suspect is a large amount of users that they lost as a result of freezing trading in GameStop. And I should just flag that I disagree with the assessment that regulation is the reason that Robinhood froze trading, or that, the clearinghouse capital requirements is the reason. Most major brokerages have very serious, dedicated teams that evaluate the risk and the capital that they need to put forward every day. And I suspect it may be Robinhood's inability to manage its own risk, and not any fault of any regulation.
Right. Well, look, providing an opportunity for people to make informed investments in part of their financial planning is not a bad thing. However, targeting the vulnerable Americans receiving federal relief during a pandemic.
Okay, I think that's about enough of that for now. I think what we're going to do is I'm going to take a little breather here. I have some other things I need to work on for a bit, but I'm going to come back when Jerome Powell has his press conference. As of right now, it's scheduled for 11:30 a.m. Pacific time. So that's an hour and a half from now. I'm going to stream that live and then do a summary at the end. So I'll be back for that. Oh, thank you. Thank you for the super chat.